Members, welcome you all for the very interesting program on production linked incentive schemes under the Make in India promotion concept. To address this, we have an eminent speaker, none other than Gautam Pai. Welcome, Mr. Gautam ji.
Thank you.
It's a very new and a very niche area. Plenty of opportunities are there. Out of many schemes has been introduced, one or two has started, still yet to release. Maybe when election coming near, some more schemes will be added. There is a plenty of opportunity. For that, we have with us Gautam Pai. He'll brief you how to fill the form, what are the sectors is covered, how to approach, all those things. Very interesting. Very few chartered accountants involved in this scheme. We can say it's a very good area to practice. You can make a different segment itself in your office. With this intention, we invited Gautam Pai, even in his busy schedule, agreed to come. I really thank on behalf of Bangalore branch, Mr. Gautam Pai. Once again, I welcome you all the members. The important note, this month, December ending, you need to complete your CPA hours. There are a lot of programs lined up. Upcoming 23rd and 24th December, we are conducting a CPA 2 days conference in Devraj Jaras Bhavan. I request all the members to register. Apart from that, all Wednesday CPA hours program has been conducted. We are conducting. I request a member to join and make use of this opportunity. Once again, I welcome you all. Over to Pramod for introduction. Thank you.
Thank you, Chairman. I would like to introduce CA Gautam Pai, member of our own Institute of Chartered Accountants of India, Bachelor of Commerce, and he's a valuation professional as well. Mr. CA Gautam has over 10 years of experience in inbound and outbound investment advisory, business advisory, government regulatory advisory, and corporate tax advisory. He has an extensive experience in income tax, foreign exchange related matters, including structuring of inbound, outbound investments into and from India, respectively. He has been involved in assisting corporates from different sectors in availing government incentives, including the Make in India PLI schemes and the investment promotion schemes of different state governments. He has assisted various startups from different sectors, mainly fintech, agritech, edutech, consumer tech, amongst others, in their fundraising exercise and supporting them from the finance and tax perspectives. Mr. Gautam has worked with cross-section Indian global companies across various sectors, including manufacturing, automotive, which includes the new specialization, electric vehicles, pharmaceutical, textiles, etc. Has dealt with Korean and Japanese corridor for various inbound and outbound investment opportunities in India. With this brief introduction, I present to you here the report, Mr. Gautam Pai. Over to you.
Thank you so much, Srinivasa ji. And am I audible? Yeah. Thank you so much, Srinivasa ji and Pramod ji and the entire branch of IC at Bangalore for providing me this opportunity and considering me for presenting before your for fellow members and for this particularly non-traditional area of practice. And the introduction which you gave, all credit for me goes to KPMG, where I worked for about 8 years in the M&A tax department. This was completely a non-traditional area when we left. So I left along with my partner in 2020 when this PLI schemes was just announced. We're just evaluating at that point in time that how this opportunity will flourish with just large-scale electronics PLI scheme notified by the Honorable Prime Minister. And post that, we in fact risk our jobs and just started the PLI scheme. We have filed you can say second highest number of application after ENY. I mean that's quite a challenge, and at the same time a good experience for us. And definitely, so I'll try to cover. I'll try my best to do justice to this topic, and would be happy to take you through the entire presentation. So I'll just share my screen so as to start. Would just request someone if you can just confirm if the screen is visible.
Not yet.
Yeah.
Yes, visible.
Is it visible? All right.
Yes, yes.
Yeah. So, so the PLI scheme, it's a huge opportunity. It's not only for the for chartered accountants or any consultants, but it's a huge opportunity for making India a global manufacturing hub. That's how it started during 2020, and COVID was a realization, a self-realization to the Indian government to take some enormous and huge steps towards bringing investments in India and making India a global manufacturing hub. I'll just So in order to set the context, right, I have divided the entire opportunity into 5 brackets. First one is I'll just quickly take you what has been the idea, the vision, and the objectives behind creating the PLI schemes and creating what Atmanirbhar Bharat is. And it has been honestly a huge success till now. Second, structure. So till date, 14 PLI schemes has been approved. It's notified, and honestly, all the PLI schemes are kind of 75 to 80% of it flows in the same direction. So it's important for us to structure it, and would take you through in detail. So this second slide, second section, I'll take you through in detail about the entire structure of how the PLI scheme needs to be looked at and implemented for our clients. And in fact, if someone of us is a manufacturer, then how to look at from an entrepreneur perspective. Third, overview. So I'll take you through some few 4 to 5 PLI schemes, just to give a glimpse about how they have implemented the PLI schemes, who are the approved applicants, and what lies in the future years as an impact of those schemes. The fourth is new schemes. Of course, the existing schemes are there, but there are about 7 to 8 sectors. In fact, honestly, 10 sectors which are expected to receive PLI from the central government. Those all the sectors are under evaluation and consideration by the cabinet, which has been formed particularly for this purpose. And the union budget, you'll be getting some good notifications for new opportunities. And of course, last but not the least, opportunities for our peer chartered accountants, where and how we could tap this non-traditional opportunity and be a part of the business consulting side of the PLI scheme. Yeah, just confirming I'm on the Indian economic scenario. If someone can confirm. Surajji.
Yes, sir. Yeah.
Yeah.
Then it comes.
Okay. Thank you so much. So, see how the PLI scheme came into picture. It was a realization during the COVID times when we believed that there was a lot of dependency on a country like China and for procurements of various products, and when the import stopped from China, right, for various products, including the necessities products. At that point in time, the central government decided to bring in something called Atmanirbhar Bharat. Of course, I'm sure that 100% of you would be aware about what Atmanirbhar Bharat is. But so that was one of the main agenda, wherein there was high imports. The growth rate in terms of the manufacturing was not so scalable. and of course the ease of doing business that had to be improved, and that was one of the main agenda when the Honorable Prime Minister came into reign. So for some of the examples of the products imported in India, which was in huge quantity, were semiconductor chips, your raw materials for the pharmaceutical companies. We had to be dependent on China. In fact, all the largest manufacturers of the pharmaceutical drugs were dependent on China for the raw materials, because that was one of the key reason why they even thought of bringing this into picture. And even I would like to quote one example, given by Nitin Gadkari. He quoted somewhere in the Lok Sabha speech that when you are having an ice cream, even the scoop of those ice cream, it was 100% imported in India. For example, and another example is Levi's jeans or maybe any other branded jeans which you wear. The raw material of those products come from India. Khadi comes from India, and one of the main supplier of raw materials comes from India. They go outside and then they come back to India with a tag, and then the value addition of those products is being captured in some other countries. So that was, of course, some of the few reasons why the Indian government thought of bringing PLI schemes. The vision would like to divide into 5 baskets. One is, of course, making India self-reliant on various aspects, on the import side, on the manufacturing side, on the employee generation side, right? Then making India global manufacturing hub by bringing in new technologies, because even we have human brains which goes to countries like USA. So the tech guys goes to USA and they built up big companies out there, the tech companies. But in order to retain them, there's a lot of traction, bringing a lot of traction investments in India. This is one of the motive of incentivizing by way of PLI schemes. Third is reduction in the import dependency. So the idea is to manufacture in India with domestically procured raw materials and supply in India, thereby creating an entire value chain in the Indian manufacturing ecosystem. Focus on attracting large investment. Recently I had some news which said that the Indian economy in 2021 was in pre-2021 was $1 trillion. In 2021 it was $2 trillion. It is expected to be about $5 trillion by 2026 and $10 trillion, that is multiplied by 2 by 2030, which is 5 times of what it is right now. And it is expected to be somewhere around $40 trillion by 2047. This was even validated by 2 of the largest business tycoons of India, Mr. Gautam Adani and Mukesh Ambani. So India is looking, India's people or maybe a global investor looking at India as a global investment destination. And Prime Minister Narendra Modi would like to tap on it. And for this particular reason, I would also like to highlight that a separate body has been set up for facilitating India investments in India from foreign companies and foreign investors. Invest India is a separate arm led by Mr. Arun Bagla, set up for the purpose of facilitating investments from various countries across the globe. They have built a team of high-end consultants from big 3 consulting companies, and they are one of the bodies who are consulting the ministries for implementation of the PLI scheme, since its PLI scheme is directly connected with foreign investments as well. Now, and fifth point is the helping India become an integral part of the global supply chain. So when previously, when I'll come. So during COVID times, right, it was quite important to geographically de-risk the supply of various products in India. This was the overall package. Would not take much of a time in this slide, but this was the overall package announced by the Indian government, 20.97 lakh crores, brought in the form of 5 tranches. They gave incentives and huge support to MSMEs. There were schemes like emergency working capital, subordinate debt, fund of funds, etc. Wherein support was given in form of the interest subvention, etc. Liquidity was provided to various sectors, right? Of course, that was a part of the Atmanirbhar Bharat package, tranche 2. Food processing got good amount of funds, wherein there was allocation to boost of the power of farmers, bring in motivation for the herbal cultivation, amongst others. Manrega, of course, is there, and there was a substantial allocation made to this Manrega as a part of the Pradhan Mantri Grants GKP measures. And PLI scheme was a part of it, wherein 1.97 lakh crore was allotted during November 20, prior to November 21, 2020. Sorry. The key 5 pillars behind this Make in India scheme are economy, infrastructure, system, vibrant demography, and demand. So for the implementation or the crafting of the PLI scheme has been based on these 5 pillars. Idea is to achieve growth for these particular 5 sectors, 5 pillars. Objectives of the PLI scheme, of course, to tap the core competencies of Indian industry. There is no doubt about it that there are Indian businessmen who are disrupting multiple industries. It's not only the manufacturing, but of course the technology side of it. So in this digital era, there has been a lot of tech advancement where the Indian entrepreneurs have challenged the status quo. And hence, so the idea is to tap the core competencies, boost global presence through exports. So idea is to get the Indian brands recognized globally. So only if we are able to export, in that case, when the global manufacturers or MNCs look forward to importing from India, that's where the success lies. Wherein the value addition and the tax would come down to India. Building up economies of scale, the central government has been assisting in building up Indian brands by way of taking a lot of industry consultations, right? They are encouraging innovative technologies. And honestly, we have been interacting with a lot of ministries, and honestly, for all the PLI schemes, and in fact, for the implementation of the PLI scheme, they are seriously considering interaction with the industry associations, and of course trying to give them of course comfort, at the same time challenge them of bringing in new technologies and develop in-house capabilities in India. And yeah, of course, encourage innovative technologies, because see, so PLI scheme has not been so easy for various manufacturers. So definitely there has been a challenge to a lot of companies, but of course the companies who are able to take up those challenge, sky is the limit for them. And there are companies, in fact, some of the technology startups, such as in fact recently, a startup from Hyderabad, Skyroot, they were the first ones to launch a satellite recently. And it's just a startup, but it's born in India. Yeah. Expectations: bring in large investments, expected incremental turnover, and of course, align industrial development with the global ESG goals. There has been a lot of movement on the ESG side. Of course, a different opportunity for chartered accountants as well as consultants, where the ESG advisory is building up in India. There are, norms brought, the BIFR norms brought in by the SEBI, and which are in lines, the SDG goals, the Sustainable Development Goals, are in lines with those of UN. Of course, recently the India became the G20 presidency. We have got the same, and that is one of the reasons why we would be set up. We would be considered as a benchmark in the near future of how we are adopting various sustainable development goals for ESG all combined. Yeah. And of course, so by bringing new investment, there has to be generation of new employments. Tech has seen a lot of slowdown, layoff of employees. Bangalore would have seen in the recent times as well. But manufacturing is an area where there would be a lot of employment that will be generated. They're expecting 6.45 million jobs over a period of next 4-5 years. So they take all the data basis which this expectation will be tracked. Yeah. So moving on to the structure quickly. So basically, while you are evaluating, or maybe while you start working on the PLI schemes, you have to keep some points in mind. So why it came initially? Because prior to this PLI scheme, there was MEIS, which is merchant export benefits provided for export of products globally. So different percentage was the manufacturer used to get scripts before this, but prior to COVID. Prior to COVID, so the MIS scheme was being non-compliant with the WTO norms, because India, the benefit which India got as a developing economy was been waived off, right? And due to this, even the SEZ benefit could not be renewed. So export-related incentives and for your SEZ-related benefits, which used to give benefits on export. So this was not in compliance with WTO, and that was one of the reasons why they had to structure the scheme in such a way and give incentives in such a way that it is compliant with WTO. Benefits are provided to all the domestic investors as well as the foreign investors, right? They brought in the income tax rate down to 15% for setting up new manufacturing plant. Of course, this has to be considered while you are evaluating the PLI scheme. The central government scheme, which is linked to your revenue, it is linked to a revenue, and hence you can avail, and there are general provisions in the PLI scheme which says that you can avail other incentives which are being provided by the state government, or sector specific incentives provided by the relevant ministries to the manufacturing or the service sector. And the incentive which you get, it is in the form of a revenue, financial revenue, and hence it will be generally taxed as the income from other sources. So in the financials, it will be income from other sources. Phase manufacturing program, of course, there are various sectors, for example, EV, wherein they brought in phase manufacturing program, and recently they brought in for the medical devices as well, wherein the idea is to increase the value addition percentage over a period of time. So the components which are generally not manufactured in India, and it has to be mandatorily imported from countries, neighboring countries. So in that case, they will be increasing the import duty on those set of products till the over a period of time, so as to promote manufacturing of those components in India. This is called phase manufacturing program, and hence prior to this scheme, and in fact even recently for the medical devices, they have brought in and implemented the phase manufacturing program. China Plus One strategy. So globally, in fact, it's not only in India. Globally, they're looking alternate investment destinations to China. one of the, of course, the other APAC countries, including Vietnam, Philippines, they have also tried to build up. In fact, in Bangladesh, they've tried to build up, good incentives and provided, good benefits to various foreign manufacturers, thereby giving a good kind of a competition to India. But this has to be, considered the competition, wherein even a lot of investments are going to Vietnam. FDI restrictions. So during COVID times, of course, there has been the Indian government was pretty sure that any FDI coming from neighboring countries directly, of course, it cannot point out to anyone, but any investment brought in from the neighboring countries, that has to go to the government approval route. Ideally, any FDI coming in for general sectors are considered under the automatic route. You need not have any approval, but in case of investment, for example, coming from China, you have to get the FDI approval. So for this, I'll quote an example when they have given, when the ministry has approved incentives, the PLI scheme approval, subject to FDI approval from the relevant, external control regulations body. The central government is very clear. We have interacted with a lot of authorities, and they are very clear that they want to build up tech savvy manufacturing, make India manufacturing destination, and hence they are ready to take as much measure as possible to control increase exports and reduce imports. Be it your they'll take example of anti-dumping duty, which they'll bring in, and also for example, they'll be bringing in one of the other scheme which was notified along with the PLI scheme for electronics was specs. So specs used to provide 25% of capex on the electronic components, semiconductors, specialized sub-assemblies. And the scheme is, of course, open till 31st of March. The budget is expected to be exhausted. So alongside, so when PLI scheme is on the industries and manufacturing side of various individual companies, in order to build up the entire infrastructure of various sectors, the government has also brought in promotion of various parks. One is the bulk drug park. They have recently given an in-principle approval to 3 bulk drug parks, one in Himachal Pradesh, one in Gujarat, right, and one is in Andhra Pradesh. So the three states have got approval for bulk drug parks with a incentive of 1,000 crores each. Of course, for the textile park also, because a lot of components of manufacturing of textile comes from outside India, and hence there are 7 textile parks which are going to get approved under the PM Mitra policy. So apart from this, giving a boost to the companies directly, they are also indirectly giving they indirectly incentivizing the industries to reduce their cost of setup and increase their manufacturing capacities by building up new plants. Yeah. Any questions till now? Happy to answer, or I'll just start structuring the PLI schemes in general. Yeah, I'll just. So all the PLI schemes has various parameters, and some of them are general parameters on how the scheme is formed, with the vision and the objectives which I have already mentioned. There are certain set of requirements which the ministry has brought in in the PLI schemes. So just key definitions. There's something called gestation period. So gestation period is the period within which you'll have to make the investment, right? It is prevalent in most of the PLI scheme except for one scheme, which is drones. Base year. Base year is basically they've considered FY20 as the base year. Reason being FY21 is an abnormal year wherein the production is expected to be lower. However, the normal year has been FY20, and the next normal year is FY22 and onwards. And hence, base year is important from computation of incentives for various PLI schemes, because any incentives, any incremental turnover which you have made, which the company has made over and above that made in base year. So that will be considered for the purpose of computation of incentives. Group companies is quite important because many PLI scheme doesn't allow more than one application to be filed by either of the group companies, and hence and they have taken the definition as provided under the Companies Act, right? Global manufacturing revenue. So the idea is to build up a champion, champion brand, and hence they generally consider global manufacturing revenue of the entire group as a whole. Minimum incremental turnover, of course, this is important because this will be, basis the incremental turnover, you'll be able to compute the incentives. Minimum domestic value addition, this is not there in all these schemes, but the idea is to build in the domestic value addition, because many of the scheme would have this provision of doing a minimum domestic value addition. This will ensure that there's a domestic value addition is being done domestically, and just not assembly is being done by procuring materials from outside India. Yeah. Now the other parameters. So all the PLI would have fixed investment threshold. Incentives is, so how we found out is that majority of the investment comes from few set of companies, whereas there is a room for also MSMEs and other small companies to participate. But the major investment comes from the larger companies, and hence they have kept investment threshold different for the larger companies and for different for the smaller companies, because the idea is to participate as much as possible and give incentives to relevant companies. Selection criteria, there are two types of criteria. One is selection criteria and one is the incentive criteria. Selection criteria meaning they have defined, they have given defined various criteria, including the incremental turnover, the incremental sales, for the investments. So they also consider the past historical sales of FY20 in many of these schemes. They considered net worth. They have considered gross block for us to become eligible for making an application under this scheme. This would vary scheme to scheme. I will take you through in detail when we are going through the specific scheme slide. So for selection criteria is important because this is when we are evaluating as a consultant initially, we need to evaluate whether the chances of getting the approval is a bit on a higher side or not. If the chances are very minimal, in that case, we have to be pretty sure in suggesting the client. Eligible applicants. So majorly it's the companies or LLPs who can file an application under the PLI scheme. But certain schemes, for example, pharmaceutical has different criteria of now type of applicants. So for example, the companies who are having more than 5,000 crore of turnover, some companies who are having less than 5,000 crore of turnover, they are eligible, but they are eligible under different categories of making an application. Incentive criteria is whenever they're giving an approval to you, or maybe the companies who are eligible under the PLI scheme, there are conditions linked to it. The conditions majorly are with respect to the investment, the incremental sales. There are no conditions, no major conditions from job creation perspective, but of course that's a plus. And of course, there are penalty. You cannot say a penalty, but they generally avail bank guarantee from the companies, and hence if the investment is not made within the specified time, in that case there is an invocation of bank back guarantee. But we have seen that it's quite flexible as of now. Many have deferred the investment due to various global challenges, economic challenges, and the relevant ministries have considered on a very reasonable basis. Eligible products, every PLI scheme would have a list of eligible products, the target segment, the target products to which the government of India wants them to manufacture in India. The idea is being taken from the import-export data which our government would have, but whenever with the products which are imported in large quantities and not manufactured in India in large quantities, those components and the finished goods have been considered as eligible, right? Representations has been made by multiple industries, but there's a certain set of requirement which they have, and we have to see to it that whether those eligible products are or maybe could be manufactured by a set of clients or not. Eligible committed investment, yeah, that's the same thing that so we have to. So the companies, the applicants has to commit to an investment, and by saying when we are committing to an investment, there has to be a bank guarantee which needs to be issued. Not all PLI scheme has this requirement of bank guarantee, but the commitment has to be made. So there's a lot of importance on the documentation and certification side of it. The reason I'm saying is there are few instances which we have seen that due to documentation, incorrect documentation, and delay in payment of even the application fee, there has been rejection in the approvals, and in case of rejection, there is no looking back. The incentives gone is gone, and the incentives are in crores. So they have been very fussy about this, but this is one of the critical requirements, and that's where we as a consultant come into picture, where we have to keep we have to push them in order to adequately implement the PLI scheme. And of course, there are general terms and conditions. I'll take you through in detail separately. Majorly, 4 authorities are involved. So first is the ministry, the relevant ministry. So there is a relevant ministry which is involved. There is a EGOS, which is Empowered Group of Secretaries. So the Empowered Group of Secretaries consist of various secretaries of different ministries who are leading, or maybe the minds behind the PLI schemes and the implementation of it. They are the one who will be reviewing the progress of the investments made, the revenue generated of the PLI schemes, or because of the PLI schemes, and of course dispersal of the incentives as well. Then they have kept, so all the PLI schemes, all the ministries have appointed a PMA, which is a project management agency. You can also call it as a nodal agency for the purpose of particular PLI scheme implementation. Generally, so there are 3 to 4 major agencies which have been which have got the contracts for the implementation. IFCI is the major one who have been involved in majority of the PLI schemes. So they are the one who will be processing your application. They are the one who will be coordinating or time to time connect with the investees and the ministries. They are kind of a bridge between both the applicant and the government, right? Of course, there are a lot of challenges, but they are the one who will be the one who will be successfully playing a crucial role in implementation. Technical committee, some of the honestly, some of the committees would be, or some of the PLI schemes or maybe the sectors have technical committees wherein they are the one who will be approving the eligible products, because ministry would not have that capability, but they have a technical committee or a consulting body, government consulting body, who advises them on whether the product manufactured, product approved are eligible under the PLI scheme or not. and they are the actual products for which the approval has been granted to the applicants. So, and they are also the one who would be, for reviewing on timely basis, and maybe adding or reducing the list of products. Yeah, and of course, there are other bodies, as I mentioned previously, Invest India, who advises the PLI scheme, who advises the relevant ministries on the successful implementation, because at the end of the day, it is linked to the investment, and there are a lot of investor facilitation done at the Invest India level. They have a lot of queries, and hence, for successful implementation, they act sometimes as a bridge between the investors, foreign investors, and the relevant ministries. So this is a brief process flow chart, of entire PLI scheme. So first of all, so for any PLI scheme, they are creating a separate online portal. It's an IT portal which will be, which the applicants has to interact with on timely basis for the entire scheme tenure for 5-6 years, as the case may be. Okay. So there's an online application which the applicant has to make during the application window. Okay. With the requisite set of documents, your detailed project report, fee has to be made, and an expression of interest has to be filed. So it's a one application which needs to be made online, of course, and there is a time window of wherein the PMA would receive the information, company secretarial, financials, and the detailed project report. They'll review it on a very high level basis, and wherever there are errors, they'll come back to you saying that you might want to revise or update the application and submit the correct information. It could be the correctness could be anything related to your incorrect documents, your supportings, maybe non-linkages of or maybe delinkages of various information in the same document. Right. So once we submit the correct document in the correct application, there is an acknowledgement which is generated, and that is important. So acknowledgement is important from the acceptance point of view. Right. So once the acknowledgement is received that the application is accepted, and then it moves on to the detailed appraisal, wherein the PMA is responsible for evaluating the applications in detail. In the past, we have seen that there are a lot of applications received for PLI schemes such as pharmaceuticals, food processing, recently IT hardware. There are schemes which has only a few set of applicants, larger PLI schemes. Majority of the chunk taken by the likes of Reliance, Adani, etc. Right, but the other PLI schemes has a lot of applications, and hence they do a detailed appraisal of each and every application so as to make sure that the applications are in conjunction with, or maybe are in compliance with the relevant parameters as defined in the PLI scheme. So once that is done, most of the PLI schemes would have selection criteria. Okay. So for wherein they would have to, do the selection, evaluate the criteria. They have to rank the number of applications, because if all the applicants are eligible, but the expected amount of, so they can compute the expected amount of incentives as well. If the expected amount of incentives are exceeding the budget, so in that case, that is important, wherein only a few set of the top companies, top ranked companies, basis the selection criteria, will get the approvals, right? And hence they prepare a detailed appraisal report, which is then submitted to the ministry, right? So the report goes in the form of an Excel, wherein they give marks and they give their feedback on why maybe some of these companies should not get the incentives and some of the companies should get the incentives. But we have seen in the past that the say of the PMA matters a lot because they are the one who are the implementing agencies. But of course, the final authority are the ministry. PMA will suggest, and the ministry will approve or reject. So once it goes for the final ministry review, there is a proper cabinet, there is a proper meeting which is being conducted for all the applicants, where they announce or where they announce the approved applicants, or they issue a press release giving the list of approved applicants. So here we generally keep a track of the press release, and hence before receiving the letter, there is a press release which happens. So the applicant gets to know that they have been approved, and then however, the companies who are being rejected, they are not being issued a rejection letter, because one of the things which we have noticed is they would not like to reject any companies unless it's not eligible as per the PLI scheme. So for example, if some of the applicants to whom the approval has been allotted and they're not able to fulfill the requirements as per the conditions as in the approval letter, in that case they give an opportunity, they would give an opportunity to the rejected, or maybe the applicants who are in the wait listing, right? So final letter is issued post issuance of press release, and then relevant post approval compliances that includes bank guarantee within a specified time. Of course, they're very stringent on this. Within a specified time, bank guarantee needs to be issued. Okay, and then there's a so before disbursement and after bank guarantee, there's a huge long process of completion of investments. So once the investment is completed, then the process or the process of disbursal will start, wherein you'll have to file a disbursal application along with audited reports to justify your revenue and the correctness of the data, and then they'll start evaluating on the disbursal claims. So this is the general process flow chart. Any questions still here? Would be happy to answer. Or else I'll move on to the next slide. Yeah. So we generally follow a structured approach. Maybe this could be helpful for you as well. We have never considered this, as a regulatory opportunity or an opportunity for providing tax advisory or regulatory advisory. We have always considered this as a implementation of a project, right? Project has various facets of it, right? So in order to divide this into three parts, the first part is the application phase, right? Application phase, we again divide into two parts. One is the conceptualization phase, to assess, to and advise whether the the client or the company would be eligible as per the PLI scheme. If yes, then what are the likely percentage of it? Okay, and that we get based on the our market research, based on the expected amount of the applicants for the particular product, because that's where our expertise would lie, wherein you would need to do a detailed amount of market research and evaluate the number of companies which are eligible for it, why the PLI scheme is came for them, and if our client is competing with them, of course that will impact their chances of getting the approval. So conceptualization is important, and that's where the whole magic lies. So conceptualization and formulating strategy. So once that is done, if the applicant has 25% chance or more, then we just advise client to at least go for it. So because there are if the chance is less than 10%, so then we have seen many clients go for it, but of course the chances of getting approval is very less. So implementation would include your application, preparation of all the documents, preparation of DPR, which plays a crucial role throughout the presentation, and the implementation of the PLI schemes. So application once done, that's end of phase one. Phase two would be post application, which is representation before the PMA, wherein you have to coordinate with the project management agency, evaluate all the, maybe, clarify various points as they would have, issued with respect to the detailed project report. In fact, we have seen that many times the details are not being reviewed, adequately, have to submit repetitive data, but that's what, representation means, and we have to be on our toes. So phase 2 includes representation, and if there are any issues, ministry is happy to hear. Not sure about the process, but they're happy to hear, and to a certain extent, they also, to a good extent, in fact, they take actions. Post-approval compliances. So once the approval is issued, approval letter is issued, there are certain set of compliances which leads to end of phase 2. And post-approval is basically the annual, disbursal applications and the quarterly review reports which you'll have to file. So quarterly review reports is basically the progress of the investments made by you. So on a quarterly basis, all the ministry collects information with respect to the capex made, with respect to the progress of the investments, with respect to the challenges, if any, faced by them in availing various licenses, be it environmental clearances or GST certificate, or any custom related licenses, etc. So in that case, based the QRR, the data goes to the ministry, and then a relevant action is taken from their side so as to make these things clear. Step 6, routine compliances. Routine compliances includes, providing time-to-time information, which is not, of course, there in the PLI scheme, but while implementing the project, they request for, multiple charter accounts, multiple certificates from charter accountant, etc. And various undertakings from the company, and relevant financial and the company secretarial information, if you want to put this into two baskets. Yeah, this is a quick flow of phase 1, which is basically understanding the business, determining the eligibility, verifying the information received by the clients, incentive calculation, computing the estimated computation of incentive which is expected to be there. So in the end of the slide, once we end the presentation, I'll also give a glimpse about how the incentive is computed, and also share an Excel with you. Then there's a registration, helping them out in the registration on the online portal, collation of all the documents, and uploading on the registered email ID, right? And at the end of the time, filing the application. Post application, as I mentioned, it's completely representation and addressing the relevant queries of the PMA and the ministry, right? And the post approval will majorly include the data, or maybe the success of the PLI scheme that the ministry needs to have, and so as to make sure that the investments have flown in, employment is generated, revenue has been made, and basis that you'll be getting the disbursements. Yeah. Now, for basically, so now I'll just quickly take you through the couple of selection or maybe incentive criterias. Correct. So a couple of criterias which are important for for evaluating the PLI scheme, right? And post this, it will take you through what all kind of investments have been made eligible, and what all investments have not been considered as eligible. So in selection criteria, the products has to be evaluated first. So whether the product, eligible products, the list of which is mentioned in the scheme, is being manufactured or is expected to be manufactured by the company or the applicant in the near future. In that case, the applicant should be somewhere engaged in the manufacturing, and some of the criteria for selection would also include historical manufacturing of those products. For example, giving an experience, right? And that, so the weightage has also been allotted to that, the historical manufacturing. Minimum sales and investment threshold So there is so of course there are threshold with respect to the historical minimum sales. Okay. Base year. So generally they have considered base year for the purpose of this investment threshold. Lawful applicant, that's not a selection criteria, but yes, that's important. We have to, I mean, the applicant has to issue a good character certificate, wherein they should not be any defaulter with SEBI, or they should not be any willful defaulter with RBI or with any bank or any financial institution. So that's an undertaking which they'll have to provide. Other criteria would majorly include, global net worth, which is there in case of an auto PLI. Gross block, which is there in case of, white goods. Correct. Target products and segments. So eligible products, target products and segments are defined, separately in various schemes. And and in for example, one example for other criteria is they have also in PLI scheme for food processing, right? Incentive has been given to the expenditure on branding and marketing of the Indian brand overseas. In that case, while selecting those applicants, they have also listed down the criteria of assessment of the innovativeness. So that's quite subjective, but that's innovative as well. So yeah, incentive criteria. Incentive will be based on few sets, critically on the revenue, right? Minimums on achievement of minimum sales with a minimum CAGR. So for example, some of the PLI scheme has criteria of achieving minimum CAGR. For example, pharmaceutical, it has the minimum criteria of achieving minimum CAGR of 7% year-on-year basis. Minimum investment threshold. So when the approval is being allotted, at that point in time, the approval letter would have that minimum investment commitment, and hence that minimum investment threshold becomes the minimum commitment becomes the investment threshold, which has to be adopted, or maybe which has to be incurred during the approved span of time. Timely and effective documentation, as I mentioned, they consider this as very important, of course, from a RBI standpoint or from a company's standpoint. This could be waived off by way of paying penalty, but there's no penalty in this PLI scheme, right? Majorly there's no penalty. What they can do is they can waive off your proposed incentives, and that's the reason timely and effective documentation is important. Other criteria would include, achievement of minimum domestic value addition, for example. So in bulk drug PLI scheme, there was a requirement of domestic value addition, so which we had to fulfill for getting the incentives. It's not there in every PLI scheme, but yes. Eligible investments, there's a no for some of the criteria, but for majority of all the investment made in plant and machinery, plant and machinery, associated utilities, building, technical civil works, which is related to the factory building, okay, are being considered as eligible for the PLI scheme. Research and development is also considered as eligible. Some of the exclusions which are not considered are land, your second-hand plant and machinery. That would not be considered either of the PLI scheme, because the idea is to give or maybe incentivize new investment, promote new investment. Hence, no second-hand plant and machinery would be considered. You can do that. I mean, in way you can incur the investment as a part of the project, but that would not be considered as eligible. Investment in recreational facilities or maybe office buildings, expenditure on consumables or raw materials for the purpose of testing, those are not considered. Goodwill, of course, not considered, right? So there are some exclusions, but majorly the plant and machinery, associated utilities are included here. So some of the PLI schemes also provides a limit on the category of eligible investments. For example, some of the PLI scheme would give 10%, maximum 10% allocation to R&D expenditure, or maybe 10% expenditure to a technical know-how. So not more than 10% will be considered for the purpose of eligible investments, and even in case of a building. Documentation and certification. So here, I mean, where your interest would lie also. One is, so I have divided into 4 parts. One is CS related documents, which is the documents majorly related to the company formation, your basic documents. PAN card, your certificate of incorporation, your promoter related documents, their pre-profile, etc. Any information related to subsidiary, your MSME registration, etc. So these all documents needs to be there in place. Financial information, historical, and projections are considered. Shareholding certificate they avail, because at the time of providing the approval letter, shareholding is what they evaluate, right? Because post that, any changes in the shareholding after receipt of approval letter needs to be intimated to the relevant ministry and the project management agency. Internal undertakings is those list of documents on which they request for management certificates, management undertaking. Example, bank guarantee. The management has to give a bank guarantee. Self-certification of all the annual report. That's a cumbersome task, but they have to provide. Integrity undertaking that's a general thing which they have to provide, and it's a non-defaulter undertaking which they have to provide. And also they take, while filing the application, they also take the consent for doing a physical audit at the facility of the manufacturing plant. So that is so they can come down anytime. But in the recent past, we have experienced that they generally intimate and take a prior give a prior intimation of their proposed visit to the relevant plant, so that the plant officer is ready for it. External documents, as I mentioned previously, that there's a lot of coordination needs to be done with the relevant external bodies, being a statutory auditor or an independent auditor. There's a chartered engineer who is involved for giving a certificate on the status of the plant, the validating the installation of the plant, etc. Company secretary is involved, and even the documentation is required from that point of view. Other critical conditions, quickly, I have taken through. Good character certificate is to be provided. So in case of a bankruptcy previously they are declared, or there's a willful defaulter, this scheme would not be you would not be able to avail incentive under this scheme. Related party transactions, this is important from implementation perspective, wherein if there are any because there could be multiple companies who would be forming part of the group of either of the applicants. So if there is a related party transaction happening, so that has to be at an arm's length price. The conditions or the conditions or the definition of arm's length is not given, but ethically it has to be adopted. Ethically it has to be done at a price. If there is a sales happening to a third party, if there is a sales happening to an internal party, so in that case, the comparison has to be made with the sales made to a third party. So because there could be a lot of gray area in this field, but related party transaction has to be adopted at arm's length price. Expenditure and investments, this is covered. New plant and machinery, of course, no second plant and machinery could not be considered as an eligible investment. changes in ownership. So any transaction happening post the approval, which there's not a defined criteria, but even if there is a fundraising exercise done by any private from a private equity, or there is a M&A transaction happening wherein they're entering into a joint venture agreement with a third party, thereby resulting in the changes in ownership, or there is a M&A transaction happening. I mean, when there's a merger or a demerger happening. In that case also, the intimation needs to be given. It's not an approval, but ideally it has to be a prior intimation. Incentive lapse in case the applicant does not meet the threshold criteria for any given year, right? So for that particular year, the incentive may get lapsed, right? But this would not. So in general, in most of the PLI scheme, it's this would not, take the incentives away for the future coming years. So if they're able to achieve the thresholds of the future years, in that case, the incentive of those years would not get lapsed. Refund of incentives. So honestly, I mean, this has not happened, or this is not expected to happen, but there's a provision in the PLI scheme which says that if any of the incentive is availed by way of wrongful submission of data, or changing or maybe increasing the revenue by what it actually is, in that case there has to be a the ministry will ask for a refund of the incentives along with an interest which is defined at a 3-year SBI MCLR rate, which will be compounded annually. Yeah. Invoking of bank guarantee. I mean, this is the last step. If you are not able to achieve the company is not able to achieve the incentives. Yeah, sorry, achieve the investment. Sorry. So if the committed investment is not achieved within the defined tenure, or if there's an extension granted for doing the investment, and if within those extension granted, the investment is not achieved, in that case, they have the full right to invoke the bank guarantee, and PMA will definitely do that. Yeah. See, critical challenges. See, there are a lot of issues, of course, in any of the new schemes which are being implemented, or any changes are made. There will be issues and challenges, but these are critical. I mean, 4 to 5 challenges, or maybe the issues which we have faced may be important for you when you are evaluating for your clients, or maybe if you're working together. So for stringent timelines, ministry comes up with stringent timelines. So the PMA will ask, basis the requirement of the relevant ministry, the PMA will ask for providing some set of information within 2 days, or maybe within a week. That depends on their urgency of the relevant ministry, and the companies or the applicants has to adopt to it. So it's quite important to represent and make a reasonable presentation for submission of the relevant information asked for. There's no challenge. I mean, there's no major challenge, but this is a factor which you need to make the client ready of, that this may not be like that of other bodies. One point of contact, of course. See, for example, IFC has the PMA for majority of the PLI schemes. So they have different teams who works for it. Okay, but we have seen in the past that so there is an interchange of departments within their team members, due to which there is no particular one point of contact over a period of time, which generally results into delay of process and compliances. Sometimes it also happens that repetitive information has been requested, maybe due to a lot of work, but that's what has been the case. Because attracting such amount of investments and such number of applications, processing them would be a challenge for any new agency, and therefore this has been one of the challenges. Coordination in with the stakeholders is again a challenge, because dealing with, even, tier 1 stat auditors, because you need to give the stat audit certificate within the asked time frame. And, coming from a back, KPMG, Big Four generally takes good sizable time, considering their, internal risk evaluation and getting the, wave of internal, partner way of on the document or maybe certification for. So that generally takes time, and that's a challenge in the coordination as well when we are dealing with, Big Fours or tier 1 firms, right? And also for dealing with the PMA. Format of historical information, we have seen a lot of times there is a change in the format. So yeah, we have to adhere to it. That's what the case is. But so that's an issue. I mean, no format would be consistent, for any particular PLS. And there has to be one. See, important is that there has to be a timely payment of the fee, because we have seen many companies who have been rejected. For example, so a couple of companies in auto PLA also, they got rejected because they filed the application on the last day. They paid, they actually transferred the funds on the last day, but the last day was a weekend, and the transfer actually hit the bank account of the agency on Monday, which is after the scheme tenure by 1 day, right? So that is one of the reason of rejection actually happened. There is no consideration which they have taken, but yeah. So it's quite important to adhere to the timelines and make relevant payments. Incorrect. Of course, also incorrect data if you are submitting, right, when you're filing the application, there could be a rejection due to the same. Ideally, if they provide, as mentioned previously, they provide a time frame in order to correct the application or make necessary amends. But they could consider this as a reason of rejections if the number of applications are more, and they would want to have the participants to be deleted or maybe rejected. Yeah, that's. Now, maybe I'll just take a quick 2 minutes break and also request you to ask any questions if you have for the PLI scheme. Post which maybe I'll just start the overview slide with what has been the number of PLI schemes till now, and what are the PLI schemes which are expected to come, and then maybe take some examples of 5 odd PLI schemes. Correct. Suraj, if you want to take, if there are any questions, or if you want to take some questions, just. Yeah.
We have it in the Q&A box.
Okay.
You want me to
let
read out?
me just. Yeah, it would be helpful because I cannot change this. Screen.
Is PLI available for space sector? Is PLI benefit taxed under income tax? If so, effective benefits gets reduced by tax rate. Please clarify.
So first question, PLI is not available for space sector, but there has been industry representation made by the relevant body, including ISRO, before the ministry, to give or maybe incentivize relevant set of companies who are manufacturing products or space components. So that is under pipeline, but no news in the public domain, but representations are being made and they are being evaluated. Okay. Second question, I've mentioned previously that the incentives which are received under the PLI scheme, those are considered as a financial income in the books of the accounts, and hence it would be considered as IFOS, taxable at the rate of 30%.
Yes. What happens if sales or turnover is not achieved due to market condition?
So generally there would be CAGR criteria. That is, you have to achieve a minimum compounded annual growth rate in sales. If by some condition, if there's a global economic condition, or maybe due to which we are not able to achieve the sales, that could be so there is a provision in the scheme which gives a provision of force majeure, which happens only in certain cases. But so they have given a provision only if all the applicants in the forming in that target segment are being impacted, and the industry is being impacted in general, they'll consider it. But honestly, if there are only a few companies who are being impacted due to this maybe high competition or economic changes, then it would be difficult for them. Yeah, or maybe it could get lapsed.
Expenditure on construction on factory building is permitted as eligible investment is the question.
Yes, that is eligible. Factory building expenditure on factory building is eligible. Office building is not eligible.
Also, kindly share the list of industries which are eligible for PLI and its products and other details, if you have so,
Yeah,
or if you are
that will
covering
be-
in the next slide. We
That
can
will be
take
covered
it
in the
later.
next.
You'll be covering in your next coming up slides.
Yeah.
Yeah.
That's right.
So we'll keep this open then.
Sure. That's it. The questions.
There are certain in the chat box as well.
Okay.
Okay. Yeah, I think we can move ahead. Then we can come back to any other questions. So
No problem. Or else I'll just take it at the end of the Q&A round. Whenever.
Right.
Yeah. So there are 14 schemes which are being notified, till date. It started with actually 3. During COVID, it started with 3: large-scale electronic manufacturing, bulk drugs, and medical devices. These 3 schemes were notified at that point in time. Along with those 3 schemes, they also notified specs, which was which was falling under MIT. So all these schemes, so large scale, so basically I've just divided into few parts, wherein there's a sector, the relevant ministry, budgeted outlay and scheme tenure, PMA involved, investment committed, right? So we have provided the information on the investment committed to the best of the information available in the public domain, since a majority of the information is being very confidential and they are not shared with the public. They are with the PMA and the maybe relevant applicants. And the status of all the PLI scheme currently, as you can see, large scale electronics, bulk drugs meaning the raw materials of drugs. APIs, your KSM, your key starting materials, active pharmaceutical ingredients for various pharmaceutical products. Medical devices, of course, there are 4 categories which they have provided for medical devices, which are cardiovascular or scanning devices, etc. Telecom and networking products, it was also there recently. Pharmaceuticals. So after the PLI scheme for the raw materials of pharmaceutical came, they launched PLI scheme for pharmaceuticals as well. That is for the drugs. IT hardware, food processing. Food processing also was a big success. Status: all the PLI scheme currently are closed. Okay, as of now. There's no application are being invited. The approved applicants currently, which has been allotted to the list of companies, they are the one implementing the same right now. The remaining list: white goods, that includes your components of air conditioners and LED lights. High efficiency solar PV module, larger companies including Adani and all have taken the benefits of this PLI scheme. Taken the benefits meaning they have got the approvals. They're in the process of implementation, that is committing an investment. Auto PLI, it's also closed. It came with the ACC battery manufacturing. That's a separate PLI, which is high-end technical PLI, wherein only 3 companies have been given the approval, including Ola, Reliance, and to our understanding, Ola, Reliance, and Rajesh Exports. Yeah, Rajesh Exports based out of Chennai. In fact, even Amara Raja, so it was shocking that Amara Raja didn't get. But there were about 9 applicants. The scheme got exhausted for 3. Textile PLI. So textile has been, one of the other, PLI wherein there are a lot of challenges, but of course it has been, being well adopted by the industry, and it is expected PLI 2 for textiles also in the pipeline. Specialty steel, it has come multiple times, and recently when they have, reevaluated or relaxed the criteria, industry has welcomed them with, I believe, about 55 applicants. More than 55 applicants have filed. Drone component PLI, again a good success. That's a shocker for us, but an incentive, or maybe it's a small scheme, but a scheme for the new age companies. So 120 crores of incentive has been allotted, but it is expected that basis the industry requirement, they would be happy to increase the budget of this year. And honestly, all the PLI schemes are currently not accepting the applications. So I'll come further to the schemes which are expected to come notified shortly. So there are discussions for notifying about 8 to 9 PLI schemes. Okay, and maybe bring in new PLI scheme for the existing sectors. So how it works is, for example, if any of the sector which has been allotted the PLI scheme, they have due to some or the other reason, their approved applicants are not able to meet the criteria, or they're becoming ineligible after getting approved. So in that case, or there is less number of applicants, and there is a budget which is remaining. In that case, the government or the relevant ministry has the power to bring in either new PLI scheme with the same set of budget, or they can utilize it for the existing PLI scheme by accepting new applications and increasing the number of, or maybe increasing the list of eligible products, right? So there are a few set of companies, there are a few set of sectors which are expecting PLI 2 or maybe separate PLIs. So for example, IT hardware. For example, IT hardware, it is expected that wearable and wearable devices will be added to the list. Okay, this has been in talks for a long time, but this may get added. Your pharmaceutical, even the raw materials of vaccines, or the KPIs of vaccine would get included, and maybe 5,000 crore of investment or 5,000 crore of incentive could be allocated to that. Textile 2 PLI is going to come, because that's how it has been the case with the textile PLI. I'll cover that up in the forthcoming slides for the textile PLI scheme, but that is expected. And in terms of the new PLI scheme, shipping container for servicing the domestic demand, there is a huge domestic demand which is not being currently fulfilled by the imports due to the Russia war, right? So there is a requirement, domestic requirement, and hence a small PLI scheme for shipping container is expected to be rolled out. Leather footwear, yes, a new PLI scheme. Specialty chemicals, again, yes. Bicycle, furniture, and toys are there. In fact, even PLI scheme for petrochemicals is expected to come. So Reliance manufacturers are, there's one of the largest manufacturers of petrochemicals, and lot of manufacturing companies in this space. So that scheme may come, and even is as I mentioned previously, PLI scheme for components of space tech could come down. For food processing, of course, I have not mentioned here, but it is expected that some set of budget is remaining. It is expected, basis the information shared, that PLI scheme could come down for nutraceuticals, large industry players, and marine products, right? And of course, so there was news that incentive would also be given to products like wine, so which is manufactured in very less quantity in India. So that's interesting. But yeah, the food processing industry ministry is considering the same. And all the notifications or maybe the approvals for the budget, currently the cabinet is considering the same, and hence it is expected that the same would be approved in the union budget, post which, or once the approval is received by the relevant ministry, all the notifications shall follow from the relevant ministries for the schemes. Yeah, so this is, so I'll take you through the PLI scheme for bulk drugs. Okay, so initially it came for specified 41 products. Okay, and only greenfield projects were allowed, right? The incentive was being allotted, or maybe was expected to be given to set of manufacturing, increase the production capacity for manufacturing those 41 set of products. So there were good amount of applicants, and many companies, even Hetero Group got a lot of companies, including, I guess, I believe that they got somewhere around 12 to 16 products, right, with different group companies. Granules Make Money from Gujarat got it. So there are a lot of applicants, right? The 4 different categories of products were, key fermentation based products, right? And the key chemical synthesis based product, right? And the ranking and basically the selection was for selection. The 2 parameters were the production capacity, which they would be committing, okay, and the the quoted sale price, basis which they'll get the incentive. So this was a initial PLI scheme wherein you had to quote the sales price and fix the quantum of incentives. So when you used to quote the sales price and define the production capacity, the expected amount of incentives was being computed. However, there was a cap on incentive for each product for different product categories. Okay. Yeah, so there were different product categories. For each and every product categories, there was the number of fixed applicants, okay, which were 2 to 4 for each product. So 2 to 4 applicants could file an application and get the approvals. Then there was a requirement of minimum production capacity. So the ministry wanted the applicants to give a commitment on the capacity capacity of the production, right? And there was a minimum investment threshold per product. Okay, so while evaluating or maybe implementing the PLI scheme, these 2 criteria, that is production and investment threshold, had to be considered. The one of the important criteria was the minimum DVA. So minimum DVA basically. Minimum DVA is basically the domestic value addition that you need to do, which is sales minus the imports from, or maybe from outside countries, or any procurements from a non-originating country. So non-originating country meaning if you are procured from any Indian buyer, Indian trader who has imported goods from China. In that case, that will be considered an import. So 90% domestic value addition needed to be achieved for fermentation based products, and 70% for the chemical synthesis based products. Here, the incentive was in the range of 20% to 5% over a period of 5 years. Okay. However, there was an upper cap on the incentive on year-on-year basis. Okay. Yeah. So this PLI scheme actually came for the boosting the raw material manufacturing and reduce import dependencies, because COVID made a realization that we need not be dependent on overseas countries, at least for the healthcare sector and the pharma sector. Right, we should have the in-house capabilities to service our domestic requirement of healthcare and the drugs. So those were the few set of products selected. So important point is here is the application window was reopened 4 times, because there are a few set of products which were not manufactured by Indian players, and also practically not possible. So that's what our discussion with the companies were in the recent past. So we believe that about 6 to 7 products are yet to be manufactured, yet to be given an approval, because there were no applicants, right? So if maybe if your client, if you have clients who manufactures the products, or maybe could manufacture those products, so the ministry would be happy to hear them out and maybe bring in additional window for making an application. Yeah. So this was a unique scheme which came out. Yeah. PLI scheme for food processing. So this was again a separate scheme which was notified after the bulk drugs. So the idea is to create global manufacturing champions. So every scheme has a particular objective. The scheme had creating global manufacturing champions, giving huge amount of incentives to the large players, promoting Indian brand overseas, right? So this unique scheme gave incentives or incentivize expenditure of branding and marketing of Indian brands in the overseas jurisdiction, right? So for example, if any Indian company, maybe you consider Yoga Bar, right? So they want to manufacture, they want to sell their products in Singapore or APAC regions, and they would want to do branding and marketing expenditure. Of course, there are eligible list of things which you can do, including the digital marketing. In that case, whatever branding marketing that you do, that the company would do in APAC region, 50% of it, subject to an upper cap, would be allowed as an incentive, and the incentive runs in crores. So this was a quite boost to the MSMEs and the startups who wants to take their brand globally, and in fact even for the MNCs, right? So there are 3 categories. The first category is the RTC, RTE category, the revenue-based incentives. So category 1 had 4 segments, right? One is the RTC, RTE, right, which is ready to eat, ready to cook. Second is fruits and vegetable processing. Third is marine products, right? Various value-added marine products. For example, shrimp processing, etc. Then fourth is a mozzarella cheese. So this was the large categories wherein the approvals have been allotted to companies like Britannia, ITC, Amul, and for Haldiram, etc. Right? There were large players, Choice for Marine, right? So category 1 have been, and the incentive actually runs in crores. More than 50 crores of incentives have been provided. Majority of the companies under category 1. Category 2, incentive on innovative and organic product. This is only for MSME. So of course, they had to give something to MSME, and hence some of the I believe that there are only 2 companies which were given an approval because of the subjective definition of innovativeness for the ministry. Only 2 companies got the approval. Category 3 is incentive on branding and marketing. Huge number of applicants were there, about 75, 80 applicants were there. And believe that the ministry was, humble enough to give incentive to all the applicants. Of course, the incentive amount was capped because of the fixed budget, right? Yeah, this is, so I've also mentioned the rate of the percentage of the incentive, which range from 4 to 10% for different category of products for every year. Now for the particular PLI scheme, it is expected. So just for your interest, it is expected that the PLI scheme for nutraceutical wines, etc., may get a nod in this recent times, because after PLI scheme for food processing, recently they had allotted certain portion to the PLI scheme for millets as well. Okay, so wherein a lot of companies filed the application, and they are expected to get some approvals. This is a ranking based criteria. So there are criterias which would define or maybe give marks to the applicants, and the companies which rank on on a higher side will get the incentives till the time the budget is exhausted. PLI scheme for pharmaceuticals, I'll quickly take you through it. So there were 3 categories. This PLI scheme was initially planned, but structured in a way that it came after bulk drugs, because once the investment starts flowing in from bulk drugs for bulk drug manufacturing, it makes sense for even giving a boost to the PLI scheme for pharmaceuticals. So this was to increase the capabilities for manufacturing for various products in the healthcare sector, and bring in new investment to create a global champion, right? So if you can just see that Amneal, Dr. Reddy, Intas, Zydus, Sun Pharma, Torrent, those are the companies who are the beneficiaries of 1,000 crore incentives independently. So the scheme was, I believe is 15,000 crores. Yes, the budgeted outlay. A majority of the investments have been, taken. 11,000 crore of investments or incentives have been taken by the 11 players. There is large applicants. So the applicant category has 3. That is Group A, Group B, and Group C. So Group A are the companies who are having a gross manufacturing revenue of over 5,000 crores. Group B applicants are the companies who are manufacturing, who are having a GMR of between 500 to 5,000 crores, and the remaining Group C applicants were having GMR of less than 500 crores. Separate section was there for MSME applicants, because their criteria is 250 crores. So in this case, majority of the incentive have been flown to those 11 companies, which includes the companies mentioned here under. And the categories for products. So basically, the applicants, any applicant could manufacture any product category which are mentioned here, right? Category 1, 2, and 3. So the only change is because of depending on the type of products, they have incentivized it. So the incentive is in the range of 3 to 10%. Group A applicants, I believe, is for companies like Mylan, Amneal, Dr. Reddy. Group B applicants, Aarti Drugs, Granules, MSN Labs. Those are well-known companies trying. So Group B and Group A, at least, that could be considered as the companies who could become our global manufacturing champions. Group C could take time, but definitely they wanted to boost the smaller companies as well as the MSMEs for in this particular field. Here there was a criteria of minimum CAGR of 7%, right? And important, maybe the interesting thing was you can change the product 5 times. So if, for example, initially you have a list of products which you need to which you wanted to manufacture, but over a period of time you have new products which falls under this category and you wanted to add. So you could, the scheme provided for changing the product mix 5 times during the entire tenure. So this was quite interesting, and that's where the role of consultants play from providing value-added services. Yeah, I'll quickly skip to white goods. Yeah, white goods. I'll just quickly take you through it. So there were 5 segments. One for AC components, so high value intermediaries, low value intermediaries, LED core components, and light components, right? And in this case, only they were expecting two type of applicants, one under the normal category and one under the large category. So for each, so basically, if there was a pre-qualification criteria. The companies who are having a defined gross block, basically the net fixed assets, gross fixed assets and gross revenue and a defined net worth, which was approximately 5 times, right? During the base year. In that case, they would be the one who would be pre-qualifying for the application. The incentive criteria was basically you have to do an incremental sales of 5 times and 6 times of the cumulative investment for AC components and LED components respectively. So there are criteria. See, these are the highlights of the PLI scheme. Maybe later on, maybe if requested by someone, we could also share the flyers, which would have in-depth details of it. One of the important point here was that this PLI scheme also gave approvals to certain set of companies which has FDI from China, that is our neighboring countries. So the approval have been allotted to those companies which subject to FDA approval. So they have to get the approval from earlier erstwhile FIPB body. Now they have a special facilitation agency, investor facilitation agency, which approves the FDI from the neighboring countries. And trust me, it has been a challenge. I mean, there has been a ban. Since the ban, only a few companies have got the approval. And for example, even there's a JV between a Chinese company and Voltas, a Tata Group company, which was which got the approval, but then that's subject to FDA approval, which is still pending. Yeah, so that's that. Again, quickly taking you through auto. Auto was a big scheme because 56,000 crores was allotted initially. However, the scheme was restructured to incentivize only the AAT components, that is advanced automotive technology products, which will give a boost or maybe which will support building up the e-mobility in India. Okay, and with this purpose, they came out with this scheme, right? And then the idea was to incentivize only those companies who can domestically bring in technology or they built up technology, having a minimum domestic value addition of more than 50% for those AAT products. Trust me, it has been a challenge for many companies, right? So they have divided broadly into two parts. This PLI scheme has been broadly divided into two parts. One is they're giving incentives to the champion OEM, the one who manufactures cars or maybe 4-wheeler or 3-wheeler or 2-wheeler, or the component champion, who manufactures components for the EVs, right? So broadly, these two parts are there, and so the next slide. And most of the larger manufacturers have got the incentive of approvals under this scheme without any upper cap. So this is one of the PLI scheme where they have, if you are meeting the eligibility criteria and also expected to commit to an investment of, for example, there are different committed investment in this PLI scheme. So if you're able to give a commitment basis the bank guarantee, then they have given the approvals. And in whosoever or maybe all the companies who would be meeting those criteria of the revenue threshold and the incentive threshold, they'll be getting the incentive on the incremental sales, that is DSV. So here there is a concept of DSV, basically your determined sales value, right? And the incentive is being computed on the same. The range of incentive is between 13 to 16% for the champion OEM, depending on the sales DSV that you do, and the incentive of 8 to 11% for the component champion, right? There is an additional incentive or maybe a boost if you're able to do a sale of 10,000 crore over a period of, that's a cumulative sales over a period of 2 years. And only a few 2-3 companies could be taking this benefit. And you might know the name Mahindra and Mahindra, or Tata, and maybe Ashok Leyland, to be honest. So a unique point was that Ford got the approval, and they also, they also drew from since in the recent times, they withdrew from this PLI, they withdrew from India, in fact, and they got the approval, and now they have withdrawn from the PLI scheme as well. Of course, one more point is they have provided a additional incentive of 5% to battery EVs. So basically, for manufacturing battery EVs and hydrogen fuel cell vehicles, that's a next big thing. Initially, there was also news which stated that a PLI scheme for hydrogen cells or maybe battery would be in the pipeline, and in that case, I mean, it's still not so confirmed, but it was in the news. So they are waiting for success of this PLI scheme, and in that and post which they'll be bringing up, for the next maybe 26,000 crore, which was allotted to this particular sector. Yeah, and this particular in this scheme is being in addition. So for the EV space, the scheme is in addition to the FAME subsidy that is provided to the end users on procurement of any EVs, and the PLI scheme which was being adopted for the ACC batteries. So Ola, we'll give an example of Ola, which I believe that also got an approval under this PLI scheme, and also under the ACC batteries, and also maybe Rajesh Exports got both the same, right? So in that case, investment could so this scheme does not restrict to make an application under the other scheme, right? Yeah. But this so auto PLI is expected to be one of the key game changers of the Indian EV industry. PLI for textile quickly will be taking you through. I believe it's 140, or we have about 20 minutes left. Right. So PLI for textile is expected to be out. There are challenges in this PLI scheme which were previously implemented, because a lot of industry representation had been made for defining the eligible products, for keeping the eligibility criteria. One of the challenges was there was a requirement of new company for whosoever got the approval. They had to set up a new company. That was a challenge for many players, but they brought in the eligible product list was not so exhaustive as well, as I mentioned. But this was that, and once the scheme got implemented, there was no changes expected on this couple of fronts, which posed challenges, right? But the ministry was ready to consider this issues or maybe challenges for the next PLI, which is expected to be rolled out anytime soon, right? This scheme came for MMF and technical textile products, various man-made fibers and technical textile products. But it didn't provide incentives to apparels and garments, which is which ideally should have been the case. But there's a budget left, and hence it is expected that there will be PLI textile too for apparels and garments shortly. And this could be of your interest as well, because even in the south, Chennai is being considered, Chennai and Coimbatore is considered as one of the textile manufacturing hub of India. Yeah, I'll quickly process further. Drone components. I mean, we would be proud to say that, I mean, as a startup, we started in 2020, but we were one of the we were the knowledge partners of the Drone Federation of India, and supported them on end-to-end basis for even building up this PLI scheme. So there's no detailed guidelines initially which were rolled out, right? But recently there has been new guidelines which has been rolled out for by the Ministry of Civil Aviation. This falls under that ministry, and the IFCI has been appointed as the project management agency. Notification has been done in November 29th. And this could be of your interest as well in Bangalore, because a lot of manufacturing companies, set up in Bangalore as well. right, for drones. Here it's very simple. You have to make a sales, right, and do a domestic value addition of 40%. So the drone industry, the challenge which they wanted to give is do a value addition of 40% and get incentives at the rate of 20% of the domestic value addition. This was not directly on the revenue. This was on the incentive was computed on the percentage of the value addition. And incentive is being provided to both MSME and non-MSME startups, right? There's a simple criteria. So this is particular PLI scheme will be open year on year. The tenure is 3 year, FY 22, 23 and 24. It was open for 22. Approved applicants has been, the applicants have been approved. Currently they are evaluating the disbursals for the FY 22. For FY 23, the window will be opening around in March, and and the applications could be made during that time frame for the incentives to be given for this particular. And new companies can also apply. It's not necessary that the approved applicants for FY 22 only would be given the approvals. Yeah. So this is for drones and drone components both. And this is one of the drone industry is one of the project which is close to the heart of Honorable Prime Minister Narendra Modi. And they want, the idea is to make India a global drone manufacturing hub by 2030. New PLI scheme, I'm going to quickly take you through this. Would be sharing this presentation, final presentation with you. Any questions, of course, we'll take it through. PLI scheme for shipping containers, I mentioned. Toys, of course, it's a big opportunity. Toys, a unique product. An interesting fact is that majority of the products have been imported from China, and the product quality is next to it's very harmful. That's what the data provided, and hence they have been considering this PLI scheme as quite important and expected to be rolled out in the upcoming budget. A lot of commitments have been received for various toy manufacturing companies, including Lego, and even companies in microplastics have been committed to investment near Karnataka. PLI scheme for leather and footwear. Honestly, companies like brands like Nike, Adidas, for global brands are considering to outsource manufacturing to India and procure more products made in India as compared to made in China, and they are increasing the production capacities in India as compared to as a part of the China Plus One strategy. PLI scheme for bicycles, hard to say now, but it's under evaluation right now, because considering the usage of the cycles in the recent times by many many demographic age, maybe people between the age of 20 to 40. There has been a lot of demand for bicycles, and the idea is to give a boost to the sector as well. Specialty chemicals, this is on the cards, and this is going to roll out soon. So they're waiting for the Gujarat elections to get close. This was, of course, based on our discussion. And PLI for textile is, of course, going to roll out soon. Pharmaceuticals, IT, hardware, and that's it. Now, coming to an important point, which is where our opportunity lies. So this is our personal opinion, and of course would be happy to hear your thoughts on the same, and maybe post this. We're just on the verge of the closure, but happy to connect one-on-one separately and address your queries and maybe evaluate of working together. Right. First, project management. As I mentioned, consider this as an entire project while making while advising any of your clients, or even while setting up a manufacturing facility, because you'll have to evaluate financially. You'll have to evaluate from the regulatory side whether this project makes sense or not. If it is completely dependent on the incentives provided under the PLI scheme, you have a red flag there. So, of course, project management is one of the key opportunities. Second, corporate finance. When there's a manufacturing, there has to be a source of finance. It can be equity, it can be debt. Both side, there lies an opportunity of the investment bankers who can help them, who can help the clients in, for raising private equities. And honestly, there are, global funds or investors who are looking for investments in such companies who are approved under the PLI scheme and who are looking to be a part of, Atmanirbhar Bharat plan. So yeah, corporate finance is one of the areas. In ancillary services would include your valuation, due diligences, right, from finance and operation perspective. Third, other incentives, which includes state-driven industrial policies. So basically, this is location-driven, right? Manufacturing would be set up in either of these states. Majority of these states are competing to attract investments, and Karnataka is giving a tough competition. Of course, Gujarat is also there, but so all the relevant states are giving competition and they are providing incentives. So definitely this could also be a parallel area or maybe parallel engagement that you could have with your clients. Other schemes, of course, there are other schemes including RODTEP and EPCG that you could deal with. Okay. And certifications, I'm sure that many of you would be associated or maybe connected with the companies who have recently received an approval or maybe are the PLI scheme approved entities, and they would need chartered accountant certificates. So for statutory auditor certificates, they are made mandatory. So there are opportunities for chartered accountants as well as company secretaries for preparing the documentation and issuance of certificates. So yeah, sky's the limit, and of course, if there are entrepreneurs on this call, would definitely would be interested in exploring setting up a manufacturing plant for the new PLI schemes, including toys, because including drone industry as well, of course. Yeah. So that's it from my side. Moving on to Q&A. Happy to answer questions here on.
Incentive payment on quarterly basis, or what is the periodical cycle for claiming the incentive?
So depends. Generally, it is on an annual basis. Okay. However, for pharma, they have given basis the representation. They have given the window of half yearly basis where the incentive will be given subject to finalization of accounts at during the year end. So half yearly for pharma and majorly during the majorly annual basis.
Please throw light on incentive for mobile phone manufacturing and semiconductor industry.
Yeah. So initially the PLI scheme came for for mobile phone manufacturing. The approved applicants were Foxconn, Winstron, who actually or companies like Lava, who actually manufactures who are the contract manufacturers for iPhones in India. And they have got the incentive approval. Currently, the window is closed. However, they are going to expand the product list for other, other products such as wearable device or hearable device. So, but for mobile phones, the same is closed. For semiconductors, so the idea is to provide incentives to semiconductor chips as well. So a large scale, I guess 75,000 crore of allocation had been made recently for manufacturing semiconductor chips. And Gujarat has recently got investment from Foxconn to build up the production capacities. So yes, it is there, but the scheme is currently closed. Definitely, if you are associated with the approved applicants, there could be a huge value add, because these companies generally do the project in-house and they would like to have the consulting as well.
Can eligible applicant outsource or subcontract their part of manufacturing? If so, what will the PLI benefit be? So who will get the PLI benefit?
So this is with respect. So the question is outsourcing or maybe contract manufacturing of the production process, correct?
Right. If I am not mistaken, I think it's only within the group companies is what you can do and show your capabilities. If you can throw some light on this question, you can.
No.
His
Just a
question
second,
is,
I
can
will-
eligible applicant outsource subcontract their part of
Okay, got
manufacturing?
it. Can eligible applicant outsource their part of manufacturing? If so, who will get the PLI benefit? See, the PLI benefit will be given only to the approved applicant entity only. Okay. But they cannot outsource, first of all, the manufacturing. They have to do the investment in their entity, or for example, in case of an auto, they can also set up a subsidiary, maybe a JV with more than 51% stake and do an investment in that JV entity. The consolidation of investment would happen at the parent level, but the incentives would be, and the incentives will be available on the sale at a parent level for all the sales made by the parent and the subsidiaries eligible. But the incentives will be received only by the parent.
Where do we get information of opening of window for
Right
PLI
answer.
scheme?
Where do we get the information of the opening window of the PLI scheme? So, I mean, see, this is schemes, this is sector specific incentives, which generally, is being notified. So you'll have to track the relevant websites or the relevant ministry pages of it to get the details of the notification. And the best thing to do is, keep a track on the press release. Right. So for the press, in the press release and the news article, generally the notification is being out.
For the drone PLI scheme, will value addition form sale to a related entity to subject to arm's length pricing, any additional condition? Also, the PLI scheme for the drones speak of guidelines. Have the guidelines been released? If not, will it be released anytime soon?
So two things. One is, first of all, the guidelines have been notified recently, because initially the committee was different in MOCA when the PLI scheme was notified previously. But now the guidelines has been released, and as per the guidelines, there is no specific mention or the conditions on what the transaction quantum should be, but the transaction has to be at an arm's length price. So the applicant cannot just claim incentive on the revenue inflated by sales to the group companies.
I think we are
Yes.
good to go. We don't have any other questions.
Definitely. Yeah, so I'll share the final presentation. In case you want to have a look at the relevant slides, and would love to share all the flyers if you have any specific requirement, or maybe you would like to know about any specific PLI scheme. Would share the flyer post maybe in next couple of days.
You can leave the
further
presentation
question?
with us so that we can host it on the website and they can make use of it. Okay.
Yeah, Pramodji or Srinivasji, I mean, any further questions? Happy to answer, or separately we'll also, you have my contact details.
You can share the presentation with us so that we can upload it on the website. So whoever is in need of it can download it and have a walkthrough of it. Yeah, so we can wind up this session.
Sure.
Yeah. Thank you, Mr. Gautam. Thank you for making it convenient to, hear our last minute request and take up this specialized topic, which many of our
I cannot
practitioners-
hear you, Pramodji. Hello.
Am I audible now?
Yeah. Hello.
Am
can
I
you
audible,
continue?
Gautam?
Am I audible?
Yeah, you are audible.
Yeah, I can hear you. I can hear you. Sorry.
So
Yeah.
thank you for taking your time even at your busy schedule, and thank you for
You're
giving
not
your
audible.
insights and expertise on the PLMI. And even at the last moment, you took this initiative to, explore this various opportunity what we have for the members. Thank you very much. On behalf of Bangalore branch of SISC, I thank you for taking this session and making it a very informative session. Thank you once again.
We lost you, I guess, Pramodji. Sorry.
Any issues, Suraj?
Yeah, I can
Fine,
hear
sir,
you now.
fine. Audible, sir. Promotes are audible, sir.
Yeah, it's
It's
coming.
audible.
And members, of course, this is definitely for you. The session, what we've been holding is for the benefit of all the members. I know we have the target of CP to be achieved by this December. So please make use of these CPs in the upcoming weeks so that you get your CPs as well. Thank you, everyone. Thank you for attending the session. Good night.
Thank you. Thank you so much. Thank you so much. My pleasure. Thank you.